how I made $2,000 trading the US 100. I'm just joking. I only needed a hook to keep you watching, but check this trade out. Yesterday we had NFP Tuesday, and as you can see, it was a pretty choppy day. I'll try to keep this video as short as possible to keep it only about price action, so let's get right into it. To start with, I'd like to talk about the daily chart, and right here we have this daily fair value gap, and we see that last week's Friday's candle closed right at the mean threshold of it, the middle, and this indicates bearishness, which immediately gives me some kind of a bias. Secondly, in the hourly chart, we can see that Monday we swept all the highs, all the buy side liquidity possible, and that's the second confluence giving me the bearish bias. So we can see that at 9:30 we opened higher, sweeping these highs. It looks similar to the Monday's trade, and we left these relative equal lows, which indicate liquidity and of course bearishness. Then we had this first presented fair value gap, which was relatively small, and we just kept on going higher. At about 9:50 macro time, we see that price has reacted off the premium wick consequent encouragement and closed below this inverse fair value gap's mean threshold, afterwards reacting it from it and going further down, creating another fair value gap. We see that this candle closed in the middle of it, so I was still waiting for the entry, and as soon as this closed below and this candle touched this inverse fair value gap, I immediately entered, because this is my strategy, as you all know. After there was some choppiness, but we can still find some small pieces of algorithm. Like here we have the discount consequent encouragement, discount wick, and we see that bodies stay below it, and as soon as it touches here, it reacts. Then we had this news candle. It was a big candle, but it didn't stop me out because it only went to this fair value gap, and my stop was above here because my entry was from this inverse fair value gap. That means my stop has to be at the candle's high. Then we see that the price once again reacted from this inverse fair value gap, dropped below the first presented fair value gap, touched the discount consequent encouragement, once again closed below, touched the first presented fair value gap, and dropped below this inverse fair value gap, which was pre 9:30. From here we see they try to climb back up, but it closed in the lower quadrant, which sent the price lower, sweeping these relative equal lows. So even though this was a hard day, a choppy day, I still managed to make a profitable trade and use my strategy by following ICT's concepts. And yeah, so that will be it for today. Thanks for watching and have a nice day.